Pivot 66, support 61, 52, 54, 36, resistance on the upside at 70, 76, 84, and 89 as the market here reacts to the CPI number. Initially, obviously, not a good number, as you can see. But well, I mean, good depends. Good as far as us trading, it's good. As far as the market doesn't like it as much, but as you can see, it's coming right back. Nothing really deters this market coming right up here to our 70 area really quick. If you're a little tentative about trading that first bar, then just be patient and wait. First bar gets a little bit more activity because of more players are in as soon as we open up. So it's a little bit more, and we're opening up right up against our level here. So it does look a little bit, if I understand if you don't want to take it right away. But as you can see, the bond market also came all the way back. So they're not scared of nothing. And a nice little rotation here. If you did act really quick against our 70 level, and a nice rotation here off of the 70 level. I know we opened up and it just happened to be right there. So maybe some of you took it, maybe you didn't. But if you did all right. Anyway, we are using our levels here, as you can tell, as support and resistance, right? So we came up to our first resistance area here at 70, and we traded off of it. Obviously, we're getting short against resistance and support, hopefully getting some long. So that's how the game works. You can jump in long and short and try to make money. Hopefully, you buy low and sell high, right? That's the old adage. So come up here, we open up, trade against the 70, nice rotation off of it. Next level on the upside we have is up at 76. We can tell it kind of created some value up there overnight between 76 and 78. So there's some areas that it has to fight through if we do get back up there. Obviously, these are very close to all-time highs. So trade it accordingly. Keep your stops in place. Our pivot was 66, resistance up here at 70, 76, 84, 89, support below at 61, 52, 44, 36. All right, welcome some of the new folks that are in. We are trading mini S&Ps here. We're trying to take advantage of ebbs and flows of the market because we don't believe markets go straight up or straight down. 66 is the pivot. And consequently, we're trying to find those inflection points, which creates some opportunity to profit off of. That's what we're trying to do here. In addition to the levels that we give out, there's also some price action opportunities that occur once the market paints some bars. And the combination of both gives us the setups that we use to trade. It gives us a game plan, gives us an opportunity to focus in on something instead of just watching the numbers flicker away on the screen. And sometimes you're guessing as to what might be happening or what trade you want to do next. Anything I say or suggest is thought. There's a reason for the things that we do. The one thing that we keep focusing on all the time is that we're always finding reasons to trade. If you don't have a reason to trade, then you shouldn't be trading. So the reasons to trade is we talk about that in our education course over and over again so that you get accustomed and look for those things. Robert B., what kind of story is that? Getting scarier by the minute. I believe you. I'm not doubting the story. It's crazy. You can't make up something like that anyway. All right, so we're kind of hanging up here against our 70 area again. It was one of our first rotations off of this morning. It's our first resistance level. and we had a nice rotation off of it. So now we are just kind of hanging up here against it, waiting to see which direction the market's going to go. Next level on the upside, we have this resistance at 76 right now. I want to say support is probably I'd wait till the 61. I mean, it could, who knows what it could do around here. It could go either way. Some of our traders will trade the pivot first rotation back to it, but again, it's a little risky at this moment considering the market's trying to figure out what it wants to do. How to handle the, this move to the downside. As you can see, every time it moves to the downside, they don't really stay down that long. But where to get in, obviously, is what we're all trying to do, right? All right. So again, if anybody has any questions, please feel free to ask. We'll put them in the chat box area. I can see those. I have that window up, so we can talk about it there. You could tell the bond market really doesn't care about inflation. Look at this thing. It's like nuts. It's crazy. CPI climbed 5.4% in the year through June, the Labor Department said. The increase was more than 5% reported in May. Wow, that was the largest year-over-year gain since 2008. So you can see here how that number was obviously expected to be higher, and it is higher. All right, there, Robert, good trade. All right. Again, market is taking its cue from the bond market, at least initially. The bond market doesn't seem too concerned. Bond market doesn't seem to be concerned ever, at least lately. All right. So they just come all the way back. I mean, they're just 162, almost 163 handle. A yield pretty low. Let's see if I can find what the yield is on the 10s here. Is around 136. So I think 133 is the recent low. So very bond market. It's just taking it all in stride. I think it's going to, given the S&P's a reason to come back here a little bit. So here we focus in more on the mini ES, mini S&Ps, I should say. I guess mini ES is right too. Anyway, yeah, so we're focusing on the mini S&Ps. We feel that it gives us good bang for our money, that it trades well technically. It doesn't mean that anything we say or teach in our education course cannot be transformed into other markets, gold or oil. But again, oil seems a little bit thin sometimes with the, was it a dime per tick move? So they kind of get some crazy moves there. But yeah, people love to trade it, so I get it. But we don't. We focus in on one. We know when numbers are released here, what we're looking for, and I mean that's my thing here. We should always trade something that at least you can focus in on. So, I mean, Robert, I don't like to do it again, but that's a choice you have. So today we had the CPI. Obviously, that's a big number at 11 o'clock today. If you're going to be trading at that time, there's going to be a Fed speak. Bostic is speaking. He's giving a speech at 11:45. Another Fed speak is also talking. At 12, there's going to be a 30-year note auction, which yesterday there was a 10. And then at 1:30, another Fed speak, and then at 1:50, another Fed speak. So there are some guys who are going to be talking that could create some volatility, and just want you to be aware that those things are happening. We try not to trade when there's a number. At least we don't like to have a position, I should say, not so much trade when there's a number, but I don't like to have a position on when there's a number. Consequently, we try to lessen our risk, but there's no numbers coming out here at the top of the hour at 9 o'clock. The big number that we're all reacting to right now is the CPI number. And obviously that was a little bit, high. And that's why you got the initial move to the downside here. Getting ready for, as we're next level on the upside, we have is the 74 area. That's the next level of resistance. Get ready for second quarter earnings season, which formally kick off today as JP Morgan, Goldman Sachs release results. Other major financial institutions will also be reporting this week, including Bank of America, Citicorp, Wells Fargo on Wednesday, Morgan Stanley on Thursday. The banking industry is likely to unveil some blowout results, with the S&P 500 financial sector earnings doubling year over year, though much of the growth will be measured against a time when much of the economy was brought to a pandemic standstill. Okay, so, that is a situation there, right? Banks recently announced that they would boost their dividend payout after the Fed gave major lenders a thumbs up on the most recent round of stress tests, as we drifted up here to the 73 area, missing our entry point. Again, depending on what your entry point is, if you did to a point above and below, you did okay. 74 is our level. Again, how you scale in is up to an individualized basis. If you're just taking the level straight up, obviously you didn't get filled, right? But if you scaled in a point at 73 and you had a nice rotation off of it, nice trade. Again, that's only if you're trading multiple contracts, obviously. So the level we have, 76. I keep saying 74. My bad. I keep thinking of 74 for other reasons. So I'm sorry. You're right. Obviously, I'm trading the 74 area for other reasons. So 76. My bad. Sorry about that. I said that the value area is up there at 76 to 78. So that's true. Thanks somebody for correcting me. I appreciate that. Finally, you guys got to speak up if I'm saying something wrong. Well, somebody did, so that's good. I appreciate it. They're KP. All right. Let's see what the market wants to do over here. Next level on the upside is 76. Okay, I should write that a lot bigger on my page here. There are the levels for us, in case you were wondering, in the chat box area. Those of you who might have just came in a little bit late, those are the levels we're going to use as a guide to the day. And we can tweak them, we can add to them, we can adjust them, we can cancel even some of them. I mean, this is trading, so nothing here is etched in stone. It almost looks like we're trading on the bond market, right? Almost. All right. Slowly upticking here. Next level of resistance we have is up at 76. All right. Mm-hmm. Yep. Oh, that was a nice little break there for you. Where that came from. But again, we're looking at the 76 area. Support would be around the 70-ish. All right, just kind of bouncing around, trying to figure out what it wants to do. Our blue band's coming in there at 69, so we got a little support down in here. If you are short and we're up here, that's where you want to cover some. All right, let's see. As labor shortages takes hold in the United States, many industries have been hit hardest. Are offering perks to lure back workers. Restaurants and bars and hotels created 889,000 new openings in May before hiring 340,000 workers in June. But leisure and hospitality have also been one of the only sectors where resignations continue to accelerate. Scores of Americans who lost their jobs have yet to even begin looking around or take offers, with job openings remaining at a record high in May. McDonald's franchise, which owns 95% of the chains, 13,450 restaurants, are adding emergency child care and other benefits like wages and increases, paid time off, and tuition costs to draw enough staff. Wow, that's pretty damn good. That's not a bad deal at all over there. The initiatives could also help improve the Golden Arches image as an employer. It follows discussions throughout the year as employee programs surrounding training and workplace flexibility, which individual restaurants are now adapting. McDonald's stepping up. Well, they actually need some players. I mean, they need some people to help them. So, I mean, the Starbucks around here, I don't know who goes to Starbucks, but the Starbucks around here, can't even stay open past 3 o'clock or 2 o'clock in the afternoon because they don't have enough people to work till 6 or 7 or whatever time they close. So it's kind of weird, right? It's kind of goofy what's going on. Maybe if they stop giving that supplement, maybe things could change a little bit. I don't know. I'm just thinking out loud. But I think it's supposed to end in September, so. All right, well, we are just kind of range bound here. It did dip down to 70 there. If you may be a little aggressive, you could have, there's a couple of reasons to buy them down there around the 70, 69, 70 area. As we rotate up here, we've got 76, our next resistance area. bonds on their highs again. And we are on their initial, interim highs as well. I'm just pointing it out. I don't know if that's going to be the case. So. Timber supply chain shortages coupled with swift economic recovery saw prices of many items soaring during the pandemic. One of the most notable increases was for lumber, which is a significant material for many industries, including house building, maybe home building. While the historical run has come to an end, it could take a while for prices to go back to pre-pandemic levels. Lumber futures, lumber futures surrendered all of their astronomical 2021 gains on Monday, settling down 5%. To $712 per 1,000 board feet in Chicago. Okay, I don't know what that means, but hey, whatever. Supply and demand are behind the latest moves as home builders and do-it-yourselfers started to hard pack on projects due to the prices. So that means they didn't do them. While sawmills upped up production levels for the same reason. In fact, new home constructions and home improvement sales in May were to 8.8 and 8.1 lower than the highs seen in March. Lumber prices traded as high as $1,733, and now it's down to $712. $1,700. Wow, that is something. That's a big miss, or something. So now we know why it was so high. Lumber futures were mostly trading between $200 and $400 per thousand range before the pandemic. So it's still almost double the price. And then it'll take about a month to reflect the futures price, which is at $700. Well, that's pretty amazing stuff, actually. All right, we'll continue to slowly uptick. We got 76 levels, our next level of resistance. As we slowly or quickly, depending on how you look at it, come up here. I traded there at 75.5. I don't know if you got filled there. I did not. But if you got it at 75, then you're doing a little bit better. Oil markets are likely to remain volatile until there is clarity in OPEC production policy, as volatility does not help ensure orderly and secure energy transitions, nor is it in the interests of other producers or consumers, the IEA wrote in a latest monthly report. While prices at these levels would increase the pace of electrification of transportation sectors and help accelerate energy transitions, they could also put a drag on economic recovery, in particular emerging and the developing countries. It's a whole bunch of BS, but hey, okay. That oil thing I could never understand the oil thing. Just never could understand how, why, what. It's always like weird to me how they, well, I don't know why higher oil prices is good. I mean, I do understand the theory behind it. I just don't get it. Anyway, it's only me that I don't get it. So, all right, well, we're hanging up here against our 76 area, trying to see what it wants to do or not. You never know in these markets. And that's why we have our stops in place, right? So keep your stops in place. That way you don't have to get, it's not a big deal. No. All right, we got here our 75.5 this time did get filled. And getting a little bit of a rotation here against our 76 level, if you did get in. Again, if anybody has any questions, if you bring up the chat box area, that's where we have that's where you can ask your question. Again, we gave out our levels this morning. For those of you who might have come in a little bit late, we'll repeat the levels. There they are in the chat box area. Obviously, working the 76 area here a little bit. You do have a time factor that you have to consider sometimes, as we are hanging around the 76, trying to see which way it wants to go up here. Let's see what else we can talk about here. As we are trying to rotate here off of our 76 here. Remember, like I said, you have to consider some time factor as well. So those of you who are concerned about that, it's giving you a nice rotation here to get up to our top level there against the 76.5. I did not get filled up there, but maybe somebody else did. As we're nicely rotating here off of our 76 area. All right. There's our little rotation against our 76. Hopefully, maybe some of you were able to take advantage of that little trade. If you want to try to stay short, you could do that. Probably down to 70 would be a really nice trade if we can get down there. But again, keep a trailing stop if you have anything left over. And a nice rotation here against our 76. So our first two resistance levels worked out very nicely for us. Minimal risk on both of them. And a nice rotation here against our 76 area. Again, we are trying to find those areas of inflection that give us an opportunity to scalp the market. And that's what we're trying to do here for 2 to 3 points right now with this kind of volatility. Obviously, when volatility picks up, our stops have to be expanded a little bit to take into consideration the slippage and stuff like that occurs when there's light volume in the trader book and the yeah, you know what I'm talking about there. And the ladder ticket. Thank you. It's an order book, ladder ticket. You know what I all meant. If you're following, if you're tuning me out, then you have no idea what I'm talking about. But if you were listening, you do know what I'm talking about. Okay, good. It's sometimes you just slips. Can't think of what I want to say. I mean, I know what I want to say. I just can't. Yeah, All right. Okay, we are hanging here. Nice rotation against our 76 area. Support right now would be around the 70 area. See what it wants to do if it gets back down there. That'd be a nice little trade. Also, it'll be a little support area at this for the time being. Not yet. It's a little too early for that. All right, again, so our 76 area worked very nice, and we've come all the way back down here. If you're trying to stay short, have a trailing stop. Like I said, the 70 area would be a nice place to cover those if it do get down there, but have a trailing stop on anything left over. That way, you don't lose any money on the trade, and try to make. This is how we try to get something more than 2 points or 3 points on our trades, right? You already got good 4 points here. I mean, you're scaling some off. If you're trading multiple contracts, you're peeling some off, and that way, again, you get more than 2 or 3 points on your trades, and be happy. At least that's what we try to do here: make you happy. Tuesday in summertime. You got filled at 76.5. Nice. I did not get filled at 76.5. So very nice. You're a happy camper. But no but. There's no but if that's a high. There's no but here. There's just no but. But I'd like to hear the rest of this but. Sometimes stuff works out a little bit easier than other times. Other times it works out you got to work it. No. Why would you do that up there? Like I said, sometimes the trades work out very nicely, and other times you have to work it a little bit. Not all of them are going to be at least as easy and kind of work out as quickly as they have. So that is, but today they kind of worked out very nice. That's not a good but. All right. So the market is kind of just hanging up here. Got down to 71-ish area. And hopefully maybe again, if you have a trailing stop. Yeah, you did. I mean, that is not a reason. I mean, that is like, you got to, okay, you did, unfortunately. Yeah, I get it. I get it there, Robert C. All right. So again, if you have a trailing stop, you're probably filled right now. So that is not next level on the upside. We have is nothing till up at 84. You can see that it kind of butted up right against the value area there, and then came off, which kind of maybe expected here, and now if we get above that value area, we will probably get some stops in place up there. But again, these are all-time highs, so I'm not jumping on that like, oh, that's the next play. It's not what I'm doing. Okay. I'll get right on that. I don't. What do I know? I don't even know. Well, to see, your first problem is you're thinking. All right. We try to take the thinking part out of the equation here. Kind of doesn't make sense, right? Trying to take the thinking part out of trading. But every time I start thinking, I lose money. You're laughing, but it's true. Because then I say, I thought this was, and then you're like questioning yourself over and over again. Hey, I've been there. Because, I mean, this is like, it's pretty straightforward. We got resistance up here for a reason. Okay, I'm going to play the resistance. If I'm wrong, that's okay. I'm wrong. But I have a reason to put down that trade. I'm thinking before the trade. I'm not thinking during the trade or after I put it on. All my thinking was done before the trade was put on, or why I was going to put on that trade. Now, if it works or doesn't work, that's another story. Then I'll think after the trade why it didn't work and try to make sure I don't repeat that mistake. But my thinking is done before the trade's put on. If you start trading if you start thinking when the trade's going on, then that's when you get caught up in the reverse ebbs and flows like you just did, because you're thinking that the market's going to go up, or thinking that there was some, but all it did was butt up against some resistance. I don't know. Does that make sense to you? I really try not to think. You're laughing, but like I said, my thinking is done before the trade's put on. Again, if anybody has any questions, you can put them in the chat box area. I'll be happy to answer any questions you might have. We are trading mini S&Ps here. We're trying to take advantage of some flows of the market using our levels that we gave out as support and resistance, and then price action opportunities that occur once the market paints some bars. Anything that we say they have reasons to put on these trades. They're not just wimpy. I mean, not wimpy. Not wimpy. I don't trade them on a whim. That's what I wanted to say. I mean, there's a logical reason why we put on these trades, and then also there's logical reasons why you get out. But you need reasons to trade, and those reasons we developed those reasons in our education course, where we're trying to find reasons to trade over and over again, whether they be support and resistance levels and or price action opportunities. We combine both of them together to give us setups to trade. That's what we do here on an everyday basis. If anybody has any questions, please feel free to ask. I said because the value area was between 76 and 78. So right now, again, next level of resistance is really not till 84. I don't know if we're going to get there or not, but again, it's not for me to know what the market's going to do. It's for me to just trade the market when the opportunity presents itself. Support, we talked about support being at 69 to 70. Right. That's a value that the market created. It's good that we got some volatility. I noticed that volatility mostly occurs when the markets go down. So we open up a little bit lower, and then all of a sudden we get an opportunity to trade. I don't know why it's always that way, but those rally markets are tough to trade. Right? They are just tough to trade. I mean, they just take the volatility out. I shouldn't say they're tough to trade. They take the volatility out of the market. Some people love rally markets. It's just not my favorite. I would go retest that 6.5 high there. And maybe some of you take the retest. I don't know. Nope. I can't say that fast enough. That's another mistake a lot of traders do. Why is it first couple hours busy, then dies down? I think a lot of, there's, the market opens, there's overnight stuff. People are trading. It is summer. A lot of people, will trade in the morning and then do whatever they do during the summer and the afternoon. But yeah, it does die out. And that's why we focus more on the morning hours to give us opportunities to trade. I think a lot of it is just basically a lot of traders and the opportunities are less. A lot of traders do take off and try to enjoy the summer. So you have less people trading. And but again, all of that could change if there's something that happens, right? But yeah, it's just nature of the beast. I don't know. I guess. I mean, most of the time, it's probably simply because people are just gone. And during this winter time, I guess people will leave, but unless you live in Florida, and then they will kind of hang around a little bit longer because there's less to do. And then if they're up money, they're not going to give it back in the rest of the day. Shh, don't tell anybody. All right, market up here on their highs again. If you're going to do the retest, it's the first time to it, not the second or third time. So that was that. Now we'll look again. Got a little value here up to 378, but I think if we do pop above it, this market is tough to keep down. I mean, there's no reason why it should. A lot of money out there, and companies making a lot of money. Everything's coming back. Stories are good. Just for the market. Kind of hard to keep this baby down. I mean, did you catch today's break? It was only like 20 S&P points, and that was a big break for this place. I'm joking. It just doesn't seem like we're gonna. I don't know. It doesn't seem like to be concerned about interest rates or nothing. Well, the bond market's telling you that they don't have to worry about it. I mean, look at that. Pretty impressive job there by the bond market, I have to tell you. I can't tell you how impressive that is, considering all the talk and all the Fed and everything like that. And they just, up here, not a concern. Again, if anybody has any questions, comments, Concerns, put them in the chat box area. All right there, Elvis. Have a good one. Good to see you make your money early and out of here. Well, I mean, well, it's early for everybody, even for you on California. Well, it's earlier for you people in California. That's all. U.S. core CPI rising its fastest pace in 30 years. That's the headline. Yeah, could be. But then again, look where we started from, right? Yeah, we're just coming up here against this. We're slowly floating back into this value area that it created overnight. The levels we determine with the technical analysis work that we put together. The technical analysis work is based on reasons that to find those areas why they're created is with the work that we do in our education course. And we show you how to find them, why they would work, what adjustments you have to make for them. There's some backup areas to them. So all of that stuff is explained in our education course, but in addition to the price action opportunities as well. So all right. Well, we seem to pull the plug here a little bit on the last few minutes here. We'll try to keep you. We were looking at 70 as some support. Get that down to the 71 range there, and then pop back up. And then it's just been kind of hanging here. So be patient, because this could be it for today, right? Unfortunately, it is what it is. But at least we had a couple nice trades, a few nice trades. If you were a little aggressive there, there's a couple opportunities in addition to the levels. The website is pitintelligence.com. Or pitintelligence.com. But if you get your contact, if you give us a telephone number, and Brad will be able to give you a call and see if you can answer any other questions you might have about the work that we do. And if you put it in here like this, nobody else sees the number. It's private. Again, anybody have any questions, feel free to ask. It's a good time to ask. Things are slow. And again, this is summer month, so this is not unusual, but it is, we trade more, we focus more on the morning hours to give us our opportunities to trade here. First couple hours a day, the best bang for our money. The rest of the day becomes a little bit slower, a lot slower, and the opportunities get definitely less. And just trade sideways, and then when you do get a rush of orders, it's a one-way trade. And I don't even know if we can be on the right side of those sometimes, because you're sitting there with a position on for so long, and you just never know which way it's going to go if you're going to be sitting on a position for so long. Pit Intelligence, pitintelligence.com. They're just kind of hanging here.
A couple quick programming notes. Wanted to welcome those that are just joining us here today as a guest. Welcome aboard. We have guests coming in. We have current subscribers to Sol Services. If you have any questions, you can certainly ask, and I'll be glad to answer them. We do this on a daily basis. This is an opportunity for you as traders, whether you're a new trader or an experienced trader, to look to develop consistent profitability in your trading. I understand this morning you had some great trades. I know it's quieted down a bit now. We try to be pretty consistent in our effort during the morning session. Right now it's 10:31 a.m. We started at 9:30. Sol had mentioned that it's starting to get quiet now, so I will pop in and give a brief overview about what the opportunity is based on these services, what the opportunity for you is as a individual trader. Price action trading is what Sol is showcasing here on a daily basis. Saul Shawul is your host and your mentor. Saul has been trading for 25 years or so. He's a CME Group 4 member. In other words, he has traded on the trading pits for a very long time. And the pandemic is what, he had a booth overlooking the pits. When the pandemic hit, he moved his operation to an undisclosed location, and he is there on a daily basis trading for his own account based on his price action trading methodology and his proprietary scalping levels and zones. Individuals like yourselves have asked him over the years to teach them how to trade, so he set up this service. It's in a Zoom trade-along format, where you can see his charts, you can hear his voice, you can interact with him via chat based on his monthly service. We can help you, if you're a new trader, get set off on the right foot. One of the questions you could ask is, you could ask us for software. A lot of times traders are out there and they're trading with the wrong software. And if you need some information about better software, let us know. Better data feed, let us know. It's all part of the service that we provide here. The first level of opportunity here is signing up for Saul's monthly, which is a subscription service. It's nominal. It really just weeds out those that are just kicking tires and those that we should concentrate on. One of the value plays is the opportunity to sign up for Saul's friends and family, which I sent out to everybody earlier. If you didn't receive it, raise your hand and I'll send it out to you personally. In Zoom, in the chat area in Zoom, it's not by email. It's direct to you in the chat area in Zoom. You can review it, decide if you want to sign on. And again, the opportunity here is for you to, as a new trader, get set off on the right foot. As an experienced trader, really focus in on the price action level of the trade. Focus in on Saul's pre-mapped out zones, prices. He gives them out to you in audio. Did they post them? Yep, I see them there. So let's just go through the TikTok and what the advantages of being here as a trader. We start here at 9 a.m. We open up the service via Zoom. We have individuals that connect from around the globe. We're focused on trading the S&P 500 E-mini 2, 3, 4, 5 trades. We're looking to help you develop what we call consistent profitability. The way we focus in on that consistent profitability and the way Saul manages his trading is to set key proprietary scalping levels, areas of interest for this morning's trade. So we set those levels, or he looks to set those levels so they're valid or more valid based on the morning session right around the cash open. So we set various levels today, and I'm going to give you the levels out in audio again and highlight the pivot at 43.66, 43.66. He had resistance at 70, 76, 84, and 89. He had support at 61, 52, 44, and 36. Now, I can't stress enough the importance in Saul's trading of those levels and zones as the morning progresses and he is looking at the market to bank his money for the day. Now, you can do the same based on your trading. It's important for you to note that the market sets the levels. Saul sets the levels. The market's really setting the levels. Saul identifies those levels for his own trading, writes them on his trading pad, loads them into his software, and you can do the same. He gives them out to everybody in audio, so you have them, and then he posts them in the chat area. Now, those become the areas that he's looking at to give him a leg up or an advantage over other traders. And in and around those levels is the trade action that Sol will act on, whether it's a fade trade, momentum trade, fade trade, short trade, momentum trade, long trade. He is looking to put on trades, the entries, the defensive position with his stops, and his exit strategy on those trades. He's looking for a minimum trading profit on each trade of 2 points. That's a minimum trading profit on each trade of 2 points plus. Okay, that's very important for you to understand that there is a focus on these levels. There is a focus based on the trades in and around those levels or zones. And there is market action and price change that happens. And he is set up to act or not act based on the action of price in and around his levels. So the first opportunity of service around here is to join us on a daily basis as a subscriber to the service, where you receive his levels, you receive his commentary, you're able to ask him questions and interact about the price movement in the S&P 500 E-mini in and around his pre-mapped out levels. And that is a nominal fee, and it just really separates people out from the tire kickers or individuals that, frankly, if you can't afford our rate, just hold on 1 second. Hey, I am back. So, AV, what are you looking for on the website? We do everything here. The website really is just a lead-in to this service. So what we like to do is we like to do everything in Zoom. We like to do everything on a personal basis. One of the things that we ask, right, is that you sign up for the friends and family offering, and that if you have any further questions or you want to get in depth based on the trade, then you quite possibly could be a candidate for Sol's private mentoring. We're very straightforward here. The levels themselves are sought after by traders. Individuals that have been part of Sol's world for a long time individuals that were on the trading floor, the trading pits with him on the trading floor would subscribe to Sol's levels, and they would pay him for the monthly service, and that's included in this service. You know, what's nice about what we have offering here with Sol is that you have him to ask questions, to interact. And I think the other dynamic here is that Sol's trading. Sol is actively scalping for his own trading account, and he's actively scalping based on his levels and zones, and actively scalping based on the S&P 500 E-mini price change. So he's looking to do 2, 3, 4, 5 trades during the morning session like you could be. And he is doing it with the same levels and zones that he gives out. So he has a vested interest in those levels and zones because he is also utilizing them in his trading. The other thing that I think is interesting is that when you ask him questions and interact with him about a particular area that relates to his pre-mapped out levels and zones, is that you're going to get an answer from him that's a real answer because he is in it. He is paying attention to it. He is versed in from a trading or trader point of view, and also because he is taking personal risk when it comes to his account in and around those levels and zones, which I think is quite interesting because that doesn't happen very often out there. More often than not, and you probably experienced, there's a lot of I don't know what you would call it, but a lot of phoniness going on out there. So we try not to allow that to happen here. So our interest is your interest when it comes to helping you bridge the gap between being a marginal trader that may get chipped away over time and losing your money and your ability to trade because your capital is gone, to a consistently profitable trader where you're building your account versus watching it chip away. So that's the opportunity. The opportunity is for you as individual traders to sign up and be part of Sol's monthly subscription. As part of that subscription, you're entitled to a trading consultation. You're entitled to be here every day receiving Sol's levels, interacting with him during the morning session between 9:30 and about 11:30. If you're not done, and I'll just throw this out there, right? If you're trading and you're not done and banked your money in the first 2 hours of trading, then reach out to us and we'll look to help you and try to set you off on the right foot and stay with you as you are honing and developing your trading skills. So join us. I'll send the link out to individuals. You know, raise your hand if you haven't received the opportunity to sign up for Sol's Friends and Family. I know, Wayne, you're going to be coming in, I think it might be tomorrow, which is great. Sven, let me know if you signed up already. Use the chat feature to respond. Hey, Robert C., how are you? Hey, Robert. Paul H. Paul, let me know. Raise your hand if you haven't received the information. And listen, we know who hasn't received it, right? We know who's, fiddling in the background and not raising their hand. Hey, Johnny Z, how are you? KG, Kurt. Hey, Joel. George T, Fred, Frank, Irvin, Ed. Hey, where's Michael? I saw Michael. Devora. Hey, Chad V, how are you? AV, let me know what you're doing. Raise your hand and I'll send it to you. And add. you're good. Adam K, you're good. AV, that's out to you now. Let me know when it's done and I'll look for you in the background. Devora, let me know. Hey, Ed, did you sign up for Saul's Friends and Family? I think you did. Just let me know back in chat. Irvin? Maybe you got it. Fred L. What are you thinking, Fred? George T. What are you thinking, George? Let me know. Paul H. Robert. Sevd. Send. SVEND. Well, you know, I pronounce it right, and then I don't know how to do it again. I'm going to have to phonetically write it out or something because I'm challenged today when it comes to pronouncing that. And again, if there's any interest to take Sol's mentoring and coursework, raise your hand also, and I'll set up a time to speak with you personally and privately about the opportunity. It's got a nice group in there now. So he only looks to take 6 or less at a time. So if you are interested, express your interest and we'll follow up with you. So I'll be in the background if you need me. And I appreciate you being here. If you like what we're doing, tell your friends. Thank you. Hey, Wayne, no problem. When it comes to you in the middle of the night, come rushing back and we'll be glad to help you bridge the gap between where you are and where you'd like to be. It takes work, it takes effort, it takes time, and it takes a willingness to do the job. Yeah, no, absolutely. I mean, I appreciate the conversation that we had. I also appreciate and understand that you're at that point where a lot of people are. And just remember, look in the mirror and send that guy for training. It's funny. I had a conversation with somebody yesterday. It's a nice conversation. And one of the things we came up with is that they've been trying for a long time, about a year or so, and they're still caught up in the standardized software, the charts, the time frames, the crosses, the support 1, support 2, support 3 type of thing that comes with standardized charts. And sometimes it's very hard to break away from that because you sort of get programmed and indoctrinated into the message that standardized software is giving you, that if I can only manage this chart, if I can only manage these blinking this and blinking that and crossing this and crossing that based on what's happening, based on the blinking indicating lagging software. So one of the parts of the conversation, I brought up a story somebody told me about the concept of opening up your own business, and particularly opening up your own business as a trader, and the tools and the format of the opportunity. So it was interesting because you are in a dual role. You are the owner, an at-risk owner of your trading business. You are in charge of your talent. And when you look in the mirror and you're pulling your hair out, if you have any hair left, and you're saying, hey, how come I'm not able to put money on the table after I've spent all this time trying to figure this out in trading? And what's looking back at you is your talent, is the actual trader. So you've got the owner and business organizer and individual that puts up the money, looking at the individual that is responsible for pulling it off, making money on a daily basis. And the question arises, when you look in the mirror, would you fire that person? Because they're just not good at what they're doing. They can't manage to get out of their own way and become a good trader. So the offer here is to help you do that, is to help you as the owner, send you as the talent to go get training and really focus on the discipline and art of making money trading. Now, that conversation was had. The results of that conversation were that they passed on the opportunity. So I find it interesting that they looked in the mirror and they came out with, we're going to give that guy or that gal a second chance, or that person a second chance, third chance, fourth chance, fifth chance for a year. And now it's going to be, into the next year or into the second part of the next year. And they're going to be doing the same thing over and over again, trying to mentalize over standardized software that's a false friend. So you can lead a horse to water, but sometimes you just can't get them to do anything. So I think that there's a story to be told there, and some information to be shared, because that's where everybody's at. You're the owner, and then you got the talent. And what are you going to do with the talent to make them a better trader and look to develop them into a consistently profitable trader? And that's the offer here. Join us as a subscriber, get your trading consultation, stick around as a subscriber, get the levels, interact with Saul in and around those levels, ask questions, and then if you want to find out more, then ask about Saul's private mentoring and farm out your, send your talent to school. Send your talent to work with a 25-year veteran of the trading pits Ask for help, get the help, and look to develop consistent profitability. But anyway, so that's just a little aside. So if you're on the fence about Sal's subscription, raise your hand and take the plunge, and then we can take it from there. Hey, Arlene. Avi, let me know if you're good. Devora, same. Ed, same. Irvin, same. Fred L. Anybody else I missed, raise your hand and I'll make sure that you're taken care of. Thank you. Hey, Arlene, I appreciate it. Let me know how we can help you. And Robert, thank you. Hey, quick shot and welcome to Donald R. Hey, Donald, welcome aboard. Hey, Arlene, did you have any questions about Sol Services? Devora, let me know. Irvin. Hey, Donald, we start here at 9, go to about 11:30ish. Let me know if you're tuned in. Yeah, Donald, just use the chat feature to respond. You should see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini. In this service, we look to help individual traders develop what we call consistent profitability. Just let me know if that's something you're interested in. pretty tough to do. There's no golden ticket. You got to put in the work. Hey, Kevin D. Hey, Nicanor, welcome. James T, give me a quick sound check. AV, let me know if you want me to go over it for you. Hey, Avi, give me a quick sound check. James T.
Yes. Yeah, thank you.
Hey, Kevin D. Nicanor, let me know if you're back.
Bye.
Hey, Nicanor, let me know if you're back. James T, let me know if you're back. James T. Avi, let me know if you're back. Anybody else would like any information about Sol's private mentoring service, let me know.